Ladies and gentlemen, good day and welcome to the Khazanchi Jewellers Limited H2 FY'24 earnings conference call hosted by Kirin Advisors. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Preeti Bharadwaj from Kirin Advisors Private Limited. Thank you, and over to you, ma'am.
Good afternoon. Thank you. On behalf of Kirin Advisors, I welcome you all to the conference call of Khazanchi Jewellers Limited. From the management side, we have Mr. Rajesh Mehta, that is the Chief Operating Officer, and Mr. Vikas Mehta, Chief Financial Officer. Now I hand over the call to Mr. Rajesh Mehta, Chief Operating Officer. Over to you, sir.
Thank you. Hello everyone. Very good afternoon. Namaskar. I warmly welcome each one of you to our first conference call of Khazanchi Jewellers Limited. Before we tell you about the financials of our company, I would brief about my company in short. Khazanchi Jewellers Limited has an experience of around 50 years in jewelry industry. Our founder, Mr. Tarachand Mehta, in 1971 started the jewelry business and incorporated in the name of Khazanchi Jewellers in the year 1996. Our headquarters is located in Chennai, Tamil Nadu, and we are holding various authority licenses as BIS hallmarking license for quality, IIBX for import of gold bullion, and supported of import-export certificate, etc. With over various categories of product and extensively a library of around 5 lakh designs, our company specializes in a device range of products including gold, diamond, and precious stones. We are into manufacturing of wedding jewelry, exclusive designs, and traditional South Indian jewelry. We have a retail space of 1,200 square feet, especially designed for a seamless shopping experience. In FY'24, Khazanchi Jewellers Limited has successfully sold around 1,400 kg of gold jewelry. We also offer various types of bullion items, coins, bars, and we are one of the prominent players in our wholesale and retail market. Our central focus is on crafting, producing, and delivering high quality of jewelry that spans a broad of spectrum items including necklace, chains, rings, earrings, bangles, bracelets, nose pins, Mangal Sutras, Kundan items, Jadau items, etc., etc. We are dedicated to create executive wedding jewelry and festival piece that captures the essence of special occasion. The competitive advantage lies in our integration of quality manufacturing from various regions of India to manufacture unique designs catering to both retail and wholesale demand. Since our promoters have a very vast experience, we have very selected and exclusive artisans from all over India who produce exclusive jewelry for us, which attracts lots of customers and wholesalers, which make us unique from other competitors. Backed by experienced promoters and a dynamic young leadership with a proven track record, supported by a seasoned senior managed team and a board of directors, we excel in wholesale business of manufacturing and selling gold jewelry to national retailers. Our brand is with trust, transparency, innovation, strict ethical values, and business practices. We have established strong systems and procedures to migrate risk and ensure quality control by strictly observing hallmark norms. Furthermore, our commitment is to design and innovation across our product range set up apart in the industry. As we have a very large experience, as our management has a very large experience, we have been having customer range from generations in our retail segment and providing quality products to all our wholesale, unique quality products to all our wholesale shopkeepers. That is our wholesale clients. Therefore, our business strategies encompass several key initiatives. To start with, we are moving to our new showroom, which is of 10,000 square feet, with the aim to broaden our product portfolio and boost our capacity. The proposed showroom is located in 286 NSC Bose Road, which is a jewelry hub of South India, a very prominent wholesale market for all over Tamil Nadu. Spanning 3 floors, the showroom is set to become a flagship destination for our customers. We have acquired a 3,045 square feet, around 304 square meters of land plot on NSC Bose Road, and then commenced prominent construction stage for the showroom, anticipating to open by May 2025. The funding for the new venture will be sourced from the net proceeds of our recent issue. Embracing a large format model, this showroom will offer an immense experience for our client. Moreover, we have obtained all necessary approvals for trade license and registrations, reaffirming our commitments to compliance and operational readiness. We are poised to deliver exceptional experience and further strengthen our presence in the market. We also aim to expand our customer network in existing markets while venturing into a new geographical territory. Strengthening inventory management practices in another priority, ensuring optimal stock level to meet demand efficiency. We continue to remain customer-centric, focusing on delivery, exceptional services with a wide design portfolio and tailored solution. We believe our strategies will bring remarkable business growth in the coming time, satisfying all our stakeholders. The company got listed on the BSE SME platform in the month of August 2023. Now I put light on the financial highlights. In FY'24, our company's standalone financial performance demonstrated substantial growth and improved operational efficiency. We recorded total income of around 821 crores, a 70.51% increase from the previous year. Our EBITDA also rose significantly, up by 148.97% to 41.78 crores, while the EBITDA margin widens by 160 basic points to 5.09%. Notably, PAT surged to 261.13% to 27.32 crores. The improvement is also reflected in a 176 basic point rate in the PAT margin to 3.33%. These results demonstrate strong financial health and significant progress towards achieving our strategic growth objectives. As we are in the jewelry industry and the prices of gold has been appreciating year on year, the company has an additional benefit of increasing valuation of gold prices of our stock of at least 20% per annum from past at least 3 years. For the further standalone H2 FY'24, our total income reached 415.38 crores with a growth of 67.38%. EBITDA for the quarter grew by 84.6% to 21.02 crores, with the EBITDA margin improving by 47 basic points to 5.06%. PAT for the quarter increased by 102.59% to 11.6 crores. The PAT margin rose to 49 basic points to 2.79%. With these brief remarks, now I request to open the floor for question and answer. Thank you once again for your presence.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to please use handsets while asking a question. Ladies and gentlemen, we will now wait for a moment while the question queue assembles. The first question is from the line of VN from Shanti Financial. Please go ahead.
Yeah, thank you. Congratulations for stellar result. My query to the management is to try to understand how did you have such a huge increase in revenue, in profits, and consequently, why has the earnings per share not kept pace with the top line growth and the bottom line growth that you have posted? Thank you.
Please repeat the question. Not audible properly.
Yeah. So you had the excellent results. So I'd like to understand how did the company post such huge increase in top line and bottom line? Will this continue for the next year also? Because these are extraordinary results. Congratulations. And
Thank
the
you.
second
Thank you so much.
question is, sure. And the second question is on the earnings per share, however, the increase is not as big as the sales and the profit growth. So kindly explain why that.
Yeah.
Thank you.
Yeah. Overall, we have been working on the items which are providing higher revenues to the company. So in this coming year, we have been focusing on the items which are providing higher margins to the company. And we are also having a strategy of marketing door to door to all our suppliers, all our shop dealers, so that they could understand about our uniqueness of our product and they could join business with us. That's the main reason of we are having an expanded business. And regarding that's the reason for our top line increase. And earning per share is around 10-11 rupees this year. And it is obviously going to continue as we are having a small retail showroom. And since we are expanding on an retail segment where the margin is higher. So we are expanding it to the 10,000 square feet showroom where we will be having a higher retail sales, which will once again give a higher retail margin. So the earning per share is going to continue and continue to appreciate in the same segment with the same percentage of growth.
Sir, I would like to thank you. I'd like to understand the next year, can we expect similar good results in terms of growth percentage?
Surely, sir. The growth story will surely continue. The management is working very hard. It is like since we have entered into the capital market now, but it is an hard efforts of the management from past 20 years, past 50 years, I'm very sorry. And it is the third generation which has been working in the company for the development of the company.
Thank you. All the best.
Thank you, sir. Thank you. Thank you so much.
Thank you. The next question is from the line of Astha from Picade Advisors. Please go ahead.
Hello. Right.
Hello.
Am I audible? Right.
Yeah.
So congratulations on the excellent results. I have a couple of questions. The first one is in the continuation with the previous question that the analyst had asked. Sir, I wanted to understand that the revenue has increased significantly, right? So is it just because of the product, the gold pricing, or we have grown volume-wise as well?
So we have grown by volume-wise as well because the price has appreciated only to the extent of 15 to 18%. But since the company has made a very higher growth.
Understood, sir.
Yeah.
Sir, second thing, the margins, like you said, the margins have improved because we are selling higher margin products, right?
Yeah. We have started focusing on that type of segments and that type of products.
Okay. So you have to give us revenue breakup as per product-wise. I mean, it's ornaments and then bullions. But we do sell gold, silver, diamond jewelry as well, right?
Yeah.
We sell gold. Yeah. So can we get a bifurcation of that as well?
The current bifurcation, I don't hold much. Actually, for the gold ornaments, we are having a sale of around 650 crores.
Okay.
And for bullion, around 140 crores. And retail segment we have And because it is gold and it is in total, what they say, we have sales for B2B and B2C differentiation only. You can drop in my number. You can drop in your number. If you want in detailed revenue, I can provide even that.
Okay, sir. Got it. So you said that we supply to businesses also, right? So I just want to understand that how much revenue is coming from direct, like, those business segments from, not directly from retail clients, but from, are we selling to, Titan or any other such companies? So how much revenue we are getting from those clients? And if possible, can you please give us top 5 customers? Is it possible?
Yeah, top 5 customers are there. I can give you the detail also. Current, just a minute, I'll check it out. We are supplying to the major, what they say, multi-store top lines, and we are supplying to Joya Lucas.
Okay.
And our major clients are, you are very familiar in the south, as KVM Jewelers, JC Jewelers, Mullen Jewelers. Actually, they are all, what they say, multi-stores with 2, 3 stores, 4 stores, and they are operating very good in all over South India.
Okay. So, sir, can you please give me a breakup? I mean, how much we are supplying to, in percentage terms, how much revenue we are generating from retail segment and how much from the...
You want the percentage of margin, sir?
So, percentage of, I didn't get you, percentage of?
Percentage of margin, what we have into B2B or B2C, you are talking about that?
Yeah, the margins as well as the revenue breakup. I mean, the sales break.
Revenue breakup, huh?
And
around 80% of the revenue is generated from B2B, 10% of the revenue is from the retail segment. For B2B segment, we have a gross margin of around 3.5%, and retail segment, we have around 8 to 9%.
Got it. So 30% is from B2B and 70% is from retail.
No. That's what we are expanding on the retail segment now. Our revenue is 10% on retail now, 90% is from B2B.
Okay. Right.
Yeah.
So do we have in-house designers with us? In-house, do we give the manufacturing of jewelry to outside, like as in for job work, or we?
Yeah, obviously we do give jewelry to the job work people, because in-house we cannot have all the artisans who are best all over the India.
Okay.
So what are the best available, wherever they are working, we provide them. We get the things manufactured from them, and then we sell it.
Okay, sir. Yeah. Thank you for now. I will get back in too. And
yeah. Thank you so much, ma'am.
Thank you. The next question is from the line of Jay Prakash from Arihant Capital. Please go ahead.
Hello, sir.
Jay Prakash, the line for you has been unmuted. You may proceed with your question. As there's no response from the current participant, we will move to the next question, which is from the line of Anmol Soni, who is an individual investor. Please go ahead.
Am I audible?
Yes, you're audible.
So, first of all, I'm happy to see the good set of numbers. So I have 2 questions. One is regarding, my first question is regarding the tax expenses. So in first half of the financial year 24, there was a low provision for tax or advance tax paid, which was showing the inflated profits. But then in H2 it was set off. So what was the actual reason behind this, due to which there was less tax which was booked in H1. So it was showing good EPS for that half and less EPS for the other half on the same revenue, almost same revenue. So my first question is regarding this.
You are talking about the taxation part?
Yeah.
Taxation part, then, sir, you said that it has been paid less in the first half and subsequently it has paid in the final half. Correct?
Right. Right.
Yeah.
On the similar sales of both half years.
Regarding that, I have to consult my auditor why it was done such fashion. But you can provide me your number, I will answer it for that.
Okay. And my second question is about the demand outlook for next 1 or 2 years, especially after the sudden spike in the precious metal prices. What will be the outlook for?
Yeah. If you take up the history of gold, whenever there is a spike in gold prices, when the prices have increased, the demand have obviously increased with the intention of the investor that the prices will go up. And as is expectation, the prices have always been increasing. So the person, whoever has invested in gold at whenever time, he has got a better return and he is happy at the time of purchase. So the demand is going to obviously increase in the coming years.
So from the volume terms, also there will be a good demand? Or
Yes, sir. Yes, sir. Yes, sir.
Offset by the price increase?
Yes, sir. Volume side also, the demand has been increasing and it will increase substantially.
Okay, sure. Okay, thank you.
Yeah. Yeah.
Thank you. The next question is from the line of Jay Prakash from Arihant Capital. Please go ahead.
Good afternoon, sirs.
Very good afternoon.
Do we outsource, designs from other jewelers, or we have our own artisans for it?
Yeah, we do outsource from artisans outside and from other jewelers also. Because all the exclusivity we cannot arrange it all inside our campus, so we source it from outside also.
So do you have any plan in the next financial years to hire more artisans of your own rather than outsourcing?
Yeah, possibility those products which are be supplying to our B2B clients, which are in very much huge volumes, we are planning to have an manufacturing units in the coming near future.
Okay. And what is our current design portfolio right now?
Yeah, we are having an design capacity of around 5 lakh designs.
Okay. But as you see, right now, gold market is on boom. So how would you tackle to it? Like it is on the... Like what are your future strategies to improve your sales for it?
So sale has been quantum-wise and value-wise. Both ways the sale has been increasing only. And the demand for gold will always be there. Since people it as a very safe investment and reliable investment. And even the prices move up, the demand will continue to grow.
Okay. And my last question is like, what is our working capital requirement right now?
Working capital requirement for the new showroom we are talking about?
Yes.
Yeah, the management is thinking of investing around some more additional of... Just a minute.
Sir, management will not increase any extra debt. They will shift off the stock from the existing showroom.
Okay.
From existing showroom, they will be shifting some of the working capital to the new showroom.
Okay, great. Thank you, sir. Have a good day.
Thank you.
Thank you. The next question is from the line of Ajay Bhatt, an individual investor. Please go ahead.
Hello.
Hello.
You are audible. Please go ahead.
Yeah, good afternoon, sir.
Very good afternoon, sir.
So first of all, congratulations for your good set of numbers.
Thank you. Thank you so much.
So actually, you said about the new facility, right? So
Yeah.
Can you just share more insights about it? Like how much it cost and
What talking about the new showroom construction ongoing?
Sorry?
You are talking about new showroom?
Yes, sir.
Yeah. The new showroom work is ongoing. We have already completed RCC construction for ground floor, first floor, second floor, and third floor. Near about it is 10,000 square feet. And now interior works will be going on, and by 2025 we will be opening it.
Okay, sir.
Yeah.
And what kind of growth you expect in coming future?
The gradual growth for the industry and for our company, it will be around 30 to 35% year on year.
Okay, sir. So, I just wanted to know, are we into contract manufacturing for big clients, or if yes, then whom do we associated with?
Major of our clients are taking from our ready stocks. We give it to our manufacturers in the bulk, and we keep the ready stock of different items, and our clients select from our ready stock itself. That is our specialty. Because in other markets, they have to place the order, such as now the Akshaya or other seasonable, they have to place the orders to the manufacturers. But now here we are getting it ready and keeping it as a stock backup for the season coming up. Select the designs from what they want. So that they can select the design from what they want in a huge variety will be there.
Okay. Yeah. Thank you. That's it from my side.
Thank you. Thank you so much.
Thank you. The next question is from the line of Saloni from SK Analyst. Please go ahead.
Thank you for the opportunity. So my question is, what is our growth sales and what is the growth in volume?
You are talking about the growth in sales. That's what last year it was around 405 crores. Now the company has achieved around 820 crores this year.
Okay.
Hello? Yeah?
Yeah. Okay. Thank you.
Right.
Thank you. We have the next question from the line of Simar, an individual investor. Please go ahead.
Yeah. Hi, good afternoon, everyone. Thank you for this opportunity. First of all, let me commend you and the management for efficiently steering the company to such high revenues and clocking such high profits.
Thank you.
I have a couple of questions. A couple of them have been already answered by you. In terms of you entering new geographies, what sort of a model do you have? Do you have a hub and spoke model where you'll have a company operated showroom and then leveraging it into branching out to new franchises in the tier 2, tier 3 locations?
That's what we are trying here to work on both the models. The company operated showrooms mainly currently we are thinking of that. On later stage we will be going for a franchisee module also.
Okay. So, and what sort of risks do you foresee with so many private backed players entering the offline market recently? How confident are you in achieving, higher sales growth?
Since we are in the field from past 50 years, our management has a very vast experience. So all the risk segments has been already filtered by the management with their experience. And each and every time, if some sign of difficulties come, the management will take up the decisions accordingly. And as of now, since we have been working so long, we don't find any much difficulties or any risk sector in this.
Sure. So a small feedback, if I may, in your future presentations when you present, can you just give a bifurcation between the gold and the diamond product? I certainly understand in the bullion segment or the ornament segment, gold would be contributing much higher, but I believe diamonds have much better gross margins.
Yeah, my diamonds have much gross turnover of diamonds compared to gold. The proportion currently, since we are not into B2B distribution of diamonds till now, and the current proportion of diamond sales is nearly 2% of the total sale.
Oh, okay. Got it. And when you mentioned about your contract manufacturing to certain leading jewelry brands, can you also mention that in your presentation, in the top three, how much are they contributing? If yes, you can take it offline as well. That's not a problem.
Currently, that data, I am not holding it in my hand. If you require, I will provide you, sir, please. Sure.
Okay. That's all from my end, sir, and all the best going forward.
Yeah. Right, sir. Thank you so much.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may please press star and 1. We have the next question from the line of Tara Kaur from EY. Please go ahead.
Hello. Hi, this is Tara from EY Capital. So my question is, do you plan to regional diversification in current year or maybe in next 2 years?
What question you are saying?
Do you plan to regional diversification in current year or maybe in next 2 years?
We are making a regional diversification in next 2 years. Current year, we have an operation of opening the showroom, new showroom.
Okay.
Yeah. Yes.
So next question is, can we see 1,000 crore revenue milestone for financial year 25?
Obviously, we are thinking of at least 25 to 30% growth. Since we have achieved around 3,820, if we add up 30%, it will surely breach 1,000 crores.
Okay. So last question from my side. Do we have online presence? If yes, what is the contribution from this vertical?
We have finalized the online presentation now. We are working on it. It will be implemented very shortly along with the new showroom opening.
Okay. Thank you, sir. All the best.
Right, ma'am. Thank you.
Thank you. The next question is from the line of Astha from PKD Advisors. Please go ahead.
Sir, I just wanted to know that, you said that we will grow by approximately 30-35% on YOY basis. So where would we see our margins going?
That's what margin is going to, since we are going to grow in the retail segment, the margin is going to increase by 9% in that. And B2B segments, we are working with 3.5%. And since we have the various other items, we are introducing various other items which are of higher margin. So the margin is going to increase only.
Okay. So, sir, is it safe to say that we will be, right now we are at approximately 5%, so that would be going to 7-8% in the next 2 years?
No, I am talking about since the proportion of retail is going to increase. If the proportion of retail is going to increase of 20%, then after the retail is increased, then 8% margin, it would be around, what they say, so it will be 1.6% increase. So the retail margin would, overall margin from B2B, B2C be increased by 0.5%, 0.7, 0.8, like that.
Okay, got it.
Yeah.
Just one last question, that we have grown very fast compared to our peers, right, this year. By 70% we have grown. So what has worked really well for us? Because I did not see our peers doing that well. I mean, some of them have grown by 50% or less than that. So what, and we have one, right?
Right. The peers who have been working in the South India, the demand for South Indian gold and all distribution is fast. The rolling turnover is fast here. So overall, the peers who are working in South India have done good.
Okay.
You can take up Tangamai, who have given them various. They have done good. Yeah, that's all right.
Okay. Thank you so much, sir. That's all from my end.
Yeah. Thank you.
Thank you. The next question comes from the line of Ramesh from Original Finserve Private Limited. Please go ahead.
Yeah. Let me congratulate the management on the superb numbers what they have delivered.
Thank you, sir.
So my first question will be like with regard to inventory. What is the inventory turnover ratio which is happening at currently?
Inventory turnover ratio is just another. I'll get you. Turnover ratio annually.
Or you can simply say me how much time it takes for inventory to get sold out in terms number of months.
Sir, in a year, it rotates around 4 times.
Okay. So if that is the case, then whatever the inflated prices from the March should have been booked by the company in this quarter. So that means the rate of growth will go beyond 30% what is in project. So any projections have been laid out on that front?
You are talking about the increase in price.
Sharply increased. So your normal growth percentage of 40% over and above the realization price of the overhang inventory as on March.
Okay.
So the impact will be
as soon as the year-end thing is then that growth story will be included in our profit.
No, I
will add additional profit.
Since you said 2 to 3 months, your stock rolls over. So obviously this quarter the numbers would have been captured by this time, or maybe we are in the midst of that. So the realization will be high and the profit numbers are going to be approximately higher than what you have projected.
Yes, surely. Expecting.
You are expecting, right? My second question is with regard, you said majorly 90% of your business is B2B and 10% is retail.
Yeah.
Retail you have a margin of 3 to 5%.
No. Retail we have a margin of around 8 to 9%.
Yeah, 8 to 9%.
For B2B
is 3.5 to 4%.
Yeah, 4%. Yeah.
Wouldn't it be prudent to increase the retail participation to have improved margins going forward, or any strategy have you drawn?
That's what in that segment only we are working on it. No, we have been opening a retail store of 10,000 square feet in a very near future, so that we have a better margin ratios.
But don't you think so? Your geographical presence only at one location will play a disadvantage compared to others who are expanding phenomenally high by way of geographical opening of showrooms at wider places?
No. Currently, since we are here, our base is here from past 51 years. We have a huge goodwill and good reputed customers. And in the near future, when we start up our new showroom, after that we have an expansion plan geographically also.
Okay. And second is, as the prices are now moving, have you any plans for hedging the prices going forward, since the gold prices are going to be marked towards upward now $2,600 to $2,700 somewhere around Diwali?
Our management has never involved into hedging. Because every time the prices have been moving to a new high only and always sustained it there. So we are expecting even much higher. Yeah.
Increased prices, don't you think so that will put pressure on your margins, both at B2B level and retail level?
No, sir. As of things are moving in quantum basis, even if you see, the volume is increasing only.
Okay, fair. And now one last question. I have seen that you have diversified the silver division into a separate entity. So whether it is forming part of this company or that has been shelled out as a different entity?
So currently it is a different entity.
Okay.
And we will decide it accordingly if something is required in regard to it.
Okay, great. Wish you all the success, and we hope the company delivers what it is promised, and of course we expect a dividend based on those performances very shortly.
Sure, sir. Sure. Thank you so much, sir.
Thank you. Wish you all the best, sir. Thanks.
Yeah.
Thank you. The next question is from the line of VN from Shanti Financial. Please go ahead.
Yes, thank you. Sir, when we do a peer comparison of all the, let's say, companies, jewelry companies in the market, you seem to have outperformed the rest of the market. So I think that's a testimony to all the work that you put in growing your revenues and your financial performance. But I would like to understand which are the companies do you really recognize, respect as the peers that you would like to be compared against, number one, and which are the firms, and therefore the ones that you don't name, we will not kind of consider in the peer set. And this is not to do with the scale of the company, the size of the company in terms of revenue, But in terms of the quality of their work and the quality of their management, which are the kind of peer companies you would like to be compared against? Thank you.
That's what. We do not take any specific company. Whoever is doing good in whatever segments, we try to pull good things from each and everybody and implement it in our company. And since our management has also got such a huge experience, so they work based on their experience only.
Yeah. Can you name one or two peers or a few peers that that we can look at, just to know from a relative performance? Of course, you're outperformed them, but just so that we have a playing field in which to look at other firms.
On this platform, I cannot say the names of any of the companies, sir. We do not follow any peer companies. We make our own strategy.
Fine. Okay. So my other question would be, when you look at your own business and the prospects in the, let's say, in the market, how would you want to look at on an ongoing basis? I'm saying if you can even remove yourself from the fact that you are part of the company and you're leading the company, what should be the good metrics by which anyone should measure the performance of a jewelry firm like yours? So, like for some of the comments made by analysts right now, in terms of geographical diversification, in terms of diversifying your B2B and your B2C mix, in terms of right now you are outsourcing your design and manufacturing, but insourcing any of it, would that be helping you in terms of providing more stability to the company's performance on a ongoing basis? So I just wanted to understand some of the metrics by which you would like to see the progress of your own company, and then, we being someone who will follow your company, we'll understand, this also. Thank you.
Yes, sure, sir. That's what, since we have that's what I told you, since we have artisans all over India, we cannot make it or everybody bring under one single roof, because we want a diversified design. So even then, since for a better margin or for better quality, we are thinking of implementing our own manufacturing unit very shortly. And regarding geographical expansion, after opening of this new showroom, we surely have a program of expanding geographically for at least 3 to 4 showrooms in coming 2 to 3 years. 2 years, sorry.
Okay.
Yeah.
And in terms of, you already mentioned the B2C and the B2B mix, which is now 10 to 90, B2C to B2B.
Yeah.
So where would you like to see that in the next, say, 2 to 3 years? Because B2C provides you higher margins. So, and one of the things probably for your company, when it has posted simply stellar results, the only probably area of significant improvement that we can see around the corner is in improving your earnings per share, which has not grown in tandem with the growth in the top and the bottom line. So, keeping all that in mind, do you think a quick increase in your diversification to B2C from B2B will help in that? And if so, in what time frame do you see B2C increasing, to what percentage and in what time frame?
Sir, we have, since we have an analysis and we think that in coming years, say when the showroom opens, at least the B2C proportion should be at least 25% in the whole wholesale value, whole top line. And the margin ratio would also be obviously higher since the proportion of B2C is going to increase. And one more thing, regarding EPS, I want to explain one thing. As on 31st March, the number of shares were less compared to as of current number of counts have increased.
Correct. Yes.
Yeah.
So just to sum it up, geographical expansion, 3 to 4 locations in 2 years, B2C 25% in 2 years. Then in-house manufacturing that you are planning in what time frame, sir?
In-house manufacturing, we cannot specify the timing, but we are working on it. Mainly, we are going to expand our own manufacturing only of the products which are in huge requirement, which are in large quantum. We are going to do. Yeah.
So right now it is 100% manufacturing is outsourced, design is also outsourced. But if you can get a sense for what percentage would you insource and in what time frame, 2-3 years, what percentage of design and what percentage of manufacturing could be insourced, it'll just give us a measure that, you're taking some actions.
So then you can take up, in coming 2 years, at least 20% of the production should be of in-house.
Very nice. And design, sir?
Yes, obviously, it is that same line of setup. When we have a manufacturing unit, we have an internal designer setup inside.
Oh, okay, wonderful.
Also, we are doing the specific design to the specific manufacturer.
Very nice. Do you also use, anyway, so I think when you in-house or in-source design, then you'll also look at automating some of this and computerizing some of this so that you can...
Computerized design, CAD designing, and all the mechanisms of manufacturing a quality product, that all will be involved.
We are specialized in fusioning of the products. Such as some dies are made in Coimbatore and then sent to Rajkot, and then it is assembled there. So that makes a huge difference in the outcome.
Very nice, sir. It's very nice to have a conversation where you're open to a lot of ideas and you've planned all these ideas already. Thank you.
Thank you. Thank you. Thank you so much.
Thank you. The next question is from the line of Smita Deshmukh from Sadguru Enterprises. Please go ahead.
Hello. Hi, Smita here.
Hello.
So my question is, though not compulsory, are we planning to report quarterly results going forward?
Yeah, we are planning to have we are working on the plan to give our results on quarterly basis.
Okay. Oh, thank you.
Yeah.
Thank you. The next question is from the line of Raj Sangvi, an individual investor. Please go ahead.
Hi, am I audible?
Yes, sir.
Yeah, hi. Thank you for the opportunity and congratulations on a very good set of numbers. So, just would like to, point out there was a management interview recently, like a month or two prior, where Mr. Vikas Mehta had told that, we are planning to 4x our top line in the next 4 years, so which translates to roughly around 40 to 42% of CAGR growth in the top line. So, like right now you just mentioned around 25 to 30%. So, are we like underestimating it, or could you throw some light on it?
It's 35% is so.
Sorry, how much? 35%?
Yeah.
Okay, got it. 35%, perfect.
No, I specified on the quantum basis.
Okay.
Value-wise, if you see, the prices have been appreciating. Additionally, if you take up, it will be that way only.
Okay, got it. So on the volume basis, we are targeting around 25%, right?
Yes, sir.
And whatever is increase in the price, that would be additional.
Yeah, that would be.
Perfect, got it. Great. Also, my second question was with respect to margin. Like I understand when when the B2C segment increases, our overall margin would improve. But specifically for the B2B segment, we have mentioned 3 to 5% margin. So, is it sustainable going forward in your opinion, or the overall margin would definitely improve because of the mix, but just the B2B segment, would it be sustainable for the coming few years?
Yes, sir, it is sustainable because we have been working on the creation of the products and all, so we will see to it that we get that set of margins achieved.
Perfect. Great. Okay. Thank you. That's it.
Right. Thanks. Thank you.
Thank you. The next question is from the line of Anisha Bhartwaj, an individual investor. Please go ahead.
Hi, am I audible?
Yes, ma'am.
Hello. Yeah. So my question is, can you put light on the revenue breakup in say like gold, diamond or other items? Whether it is in percentage-wise or value-wise?
Yeah, that's what 90% of our sales is B2B.
All right.
And B2C is 10%. And diamond proportion is around 2% in overall sales.
All right. So for the upcoming year, just want to know which segment you are going to put the pressure?
We are going to expand on the diamond segment and retail segment.
Diamond and retail segment. Okay, thank you so
Kundan,
much.
Jadao, Polki, all exclusive items which are providing higher range of margins. and the exclusivity of the product. We are working on it, and for the new showroom, we are going to have a huge collection of all those.
All right. Thank you so much.
Right now. Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may please press star and one. Participants who wish to ask questions may please press star and one at this time. Ladies and gentlemen, we have no further questions. I would now like to hand the conference over to Ms. Preeti Bharadwaj for closing comments. Over to you, ma'am.
Thank you everyone for joining the conference call of Khazanchi Jewellers Limited. If you have any queries, you can write us at research@kirinadvisors.com. Once again, thank you everyone for joining the conference call.
Thank you so much. Thank you so much, everyone.
Thank you.
Thank you. On behalf of Kirin Advisors, that concludes this conference. Thank you all for joining us. You may now disconnect your